If you haven't bought your first investment property yet, but you're thinking about it, then this video is for you because I'm gonna show you exactly how much I'm making from my 6 rental properties. This way, when you buy your first one, you'll know exactly how much you'll make. The goal of this video is just to be 100% transparent with my exact numbers. This way you can see what it's like to be a real estate investor after 3 years. And to be honest, it also helps me because I keep track of what's going on in my property. So let's get right into it with property number 1. I bought this one in November 2019. It's a triplex. I bought it using a 25% down conventional investment property loan. The purchase price was $195,000. I put $30,000 down on the property. My dad put $15K and my brother put another $15K. Between then and 2021, we put about $18,000 worth of work into it. And then in June of 2021, we refinanced for $250,000. We've recently had a vacancy in one of the units where one of the tenants that lived there for 10 years finally moved out. And as of December 15th of this year, it should be fully rented. But we had to put another $8,000 worth of work into it to fix the vacancy. Pro tip, with all of these properties, one of your biggest expenses is going to be a vacancy. So if you can try to reduce your vacancy, even if it means taking a little bit less in rent, is probably a good idea. When we initially bought the property, it was renting for $2,600, but now we've improved it and we switched out some of the tenants. The first unit, that's a 2-1, is renting for $1,495. The second unit, that's a 2-1, is renting for $1,245, and the third unit is a 1-1 renting for $895. Total income on the property is $3,635 a month. My mortgage, taxes, and insurance is $1,515.82 a month. Property management is $255 a month. I pay about $23.91 for electricity in the common spaces. Water and sewer together is about $245.80 per month, and lawn is about $60 per month. Now, I'm probably not like most investors where I try to save money to the side for vacancy, repairs, and capital expenditures. The reason why I think most investors are not like this is because after seeing what a lot of investors were investing in 2021 and 2022, it seemed like that they were not taking any money into consideration at all for CapEx, repairs, and vacancy. These numbers are represented as a percentage of the total rent to the side just in case if one of these things happen. So I'll save about 5% for vacancy, 5% for repairs, and 5% for CapEx. Repairs are small things that need to be fixed. Vacancy is for when no one's living there. You still have to pay the bills every month. Capital expenditures are large things that need to be done that end up being depreciable on the property. So after all is said and done on this property, our monthly cash flow is $982.37 per month. Now, so after this, I was hungry and I wanted to buy more properties, but I ran out of all my money because I put all $30,000 into that one property. So I ended up taking a loan out on my dad's house. My dad didn't really have any money. I still had a full-time job with a lot more space on my DTI, which simply means that my debt to income ratio was low. So we took a loan out on his house to pull $300,000 of equity out to use it to buy 2 more properties to fix them up and then refinance those out. So I used the first batch of money to buy a duplex for $135,000. This was in May of 2020. Now we've put about $11,000 worth of work into it, but it's worth $210,000. Part of that wasn't just because of the work we did, it was also because of the crazy appreciation we saw in 2020, 2021, and 2022. You could thank inflation for that. Each unit is a 1-bed, 1-bath. The bottom unit is renting for $1095 a month, and the upstairs unit is renting for $1050 a month, only because that one's in a little bit worse shape than the bottom one. That gives us a total rent for the property of $2145 per month. In February 2022, we actually refinanced this property, thank God, because we did it then and not like in March or later when the interest rates started shooting up. But when we did that, we were told that we needed to get flood insurance for the property. I fought the flood insurance report. I even got a certificate of elevation to see if it was even really needed to get flood insurance on the property. But we ended up losing, so I ended up having to get a flood insurance policy, but luckily I was able to get a cheap one for only $347 a year. The new mortgage we have on this property is $802.06 a month. Taxes are $347.04 a month. The insurance is $110.07 per month. We pay property management $170 per month, $122.97 for water and sewer every month, and $66.25 for lawn every month. After saving 15% for vacancy, CapEx, and repairs, our cash flow is $175.94. Now, I know what you're thinking.
Antonio, that's a lot of work for $175 per month.
In fact, that was all the comments I got on one of my first videos where I did this. You're right, real estate is not a get-rich-quick scheme. If you're the type of person who sees this and is like, I don't want to do all that work, but you still want to participate in the investing of real estate, then I have a good alternative for you. You should invest in Fundrise. Fundrise is an online alternative investing platform where you can invest your money into their $6 billion real estate portfolio. And right now, we're in a crazy inflationary environment and the Fed is doing everything everything they can to try to reduce it. Real estate investing is one of the best ways to protect your hard-earned money from losing it all to inflation. Not only that, but investing in income-producing real estate is typically one of the most stable things to have during a recession, simply because of the cash flow that it provides. So if you don't want to do all the work, you shouldn't be sitting on the sidelines. You should be investing in another way, like through Fundrise. Get to take advantage of the income-producing real estate and inflation protection by investing in Fundrise today. Use my link in the description to sign up. All right, and if you're still with me and you think that this is worth it, let's go for property 3. The third property was another duplex that we purchased with the cash from the cash out refinance on my dad's home. The purchase price was $141,500 in June 2020. Since buying this property, we've put about $10,000 worth of work into it, and in 2021, we actually refinanced it for $215,000. Again, some of that was from the work, and some of that was from the luck we had of when we bought it and the appreciation we got from 2020 and 2021. The upstairs is a studio that rents for $895, and the downstairs is a 3-bed, 1-bath that rents for $1,325 a month. That gives us a total rent of $2,220 per month. Our mortgage, taxes, and insurance is $1,253.47 a month. We pay $170 for property management. Don't forget, we gotta save the 5% for vacancy, repairs, and CapEx. Our water and sewer bill is $90.15 a month, and our lawn maintenance is $66.25 a month. That leaves us with a cash flow of $302.13 a month. Now, this property was a little special because we had one of our tenants, due to the moratoriums, I'm not gonna say the word, you know what I'm talking about, they didn't pay rent for 10 months out of the 2 years the moratorium was in place. So we were missing about $10,000 in rent. In the end, it ended up being like $11,500, including late fees. So we ended up evicting her because we gave her a few chances. We settled with the government. There was a government agency that helped pay for some of her rent. So we got about half of that in rent relief back. So she's still there because that was part of the contingency for accepting the $5,000, but we got half of that money back. And now she's going to be on a new lease. Luckily though, the tenants that were paying the $1,325 covered the mortgage, taxes, and insurance even after we refinanced. So really, we just had to pay for the management and the utilities out of pocket. This is really important for you to understand because buying small multifamily homes protects your downside a lot from being stuck with just a single family home with no one living in it and paying the whole mortgage yourself. Again, the cash flow is a little bit lower on this property because we bought it with cheaper tenants in there, and we've only been able to get one new tenant in throughout this time. The other one, the rent could probably be increased a couple $100. As you'll see, this is a trend where I'll buy properties that are under rented now that like break even or make a little bit, but over time we try to increase it, just like we did for the first property where we've increased the rents over $1,000 a month. It's hard to raise rents drastically when you're just buying a new property and tenants are already in there. That's partly because you can't go in and fix up the place because they're always there, but also most tenants want to stick to the payment that they're currently at. That's what they can afford. They don't want to pay more. Even if you were going to give them a nicer place, a lot of them don't want to do that. Now, these next 2 properties I purchased with a refinance from properties number 2 and 3. As you can see, there's a reuse of the same capital over and over again being used to buy more properties. This is how you scale. So the next property I bought was in Ohio. It was a triplex for $102,500 in June 2021. Unit 1 is a 2-1 that rents for $695 a month. Unit 2 is a 1-bed, 1-bath that rents for $500 a month. And Unit 3 is a 2-bed, 1-bath that rents for $550 a month. That brings our total rent for $1,745 a month. We currently have no mortgage on it because we bought this one cash from the other properties. But we might refinance soon because we just spent about $30,000 to $40,000 fixing the siding, some of the roof work, and some of the interior work for the property. We also had an issue with the tenant here who we inherited, where one of the tenants wasn't paying on time, and then when we asked them if they were gonna pay, they just wouldn't respond to us, and we went to go visit the unit and their animal poop was everywhere, so we had to get rid of them. I'm actually really forgiving, but some people just make it really hard to stick to something that they agreed to. I didn't choose this lease, they chose the lease. Anyway, so now they're gone, we're fixing up the unit, it should be done later this week, and we're hopefully gonna get new tenants in there soon. Again, with this property, the rents were low, the owner wasn't managing it properly, now there's a professional property management company in there, and hopefully we can increase the units over time and cash out to use that for more properties. Hopefully the rents can get as high as $22, $25 from this one. As for the other costs, insurance is $95.44 a month. Taxes are $332.70 per month. And I pay the property manager 10% a month. I pay about $101 for electricity, $57 for gas, $66 for water and sewer, $44.20 for garbage collection, and $48.04 for lawn maintenance. After saving the 15%, this property cash flows $564.37 a month. The next property I bought was also in June 2021. It was a duplex in Little Rock, Arkansas for $56,000. Yeah, $56,000. We fixed this one up right away as soon as we bought it with $40,000 worth of work. And I ended up buying it with a high interest rate short-term loan known as a hard money loan. The first unit was a 1-1 that rents for $650 a month, and the second unit is a 2-1 that rents for $700 a month. So total rent is $1,350. My mortgage, taxes, and insurance are $726.45 a month. Property management is only 8% of the monthly rent here, which is nice. And actually, I don't pay any utilities on this property, thanks to the laws in Arkansas. As long as it's rented. When it's vacant though, I will have to pay for electricity and lawn. Right now, one of the tenants moved out in unit 1, so we actually have a vacancy for the last 6 weeks, and we're trying to get it filled ASAP. After saving the 5% for vacancy, CapEx, and repairs, this property brings in $152.66 per month. Now, for my new property that I purchased in July 2022, actually while I was in Italy, it was a $95,000 property in Akron, Ohio. I bought it fully rented again. You can see a trend here. I keep buying properties that are fully rented. The rental income for the property was $15.25 for all 3 units. Unit 1 is a 1-1 for $525 a month. There's a studio for $350 a month and a 3-bed, 1-bath for $650 a month. We bought this one with 20% down using the money from the previous cash out refinance on this. Our mortgage, taxes, and insurance are $726.95 a month because our interest rate was a lot higher on this one at a 7.65. Now, I actually tried out a second property management company with this one because I wasn't super happy with the first one. Not that they were bad, I just wasn't amazed with them, so I was trying to check out another one and see how they compare. This one costs 11% a month. And this is actually a good tip for you who are investing out of state and need property managers. You may try a property management company for one property and not really enjoy them, so you try out a second one, and you may not enjoy that one, but it's okay. Over time, you're gonna end up finding someone you really like working with, or you're gonna end up solving the problem yourself. Electricity costs $26.23 a month, water and sewer costs $123.62 a month, and $50 a month for gas. This gives us a monthly cash flow of $288.50. All right, so let's total everything up. Property 1 gives us $982 a month, property 2, $175, property 3, $302, property 4, $564, property 5, $152, property 6, $288. That gives us a total profit of $2,465.97. That's after we've saved money for CapEx, repairs, and vacancy. So if we add that savings back in as profit, because it really is, unless if it's used, our real profit is $4,358.97. Now, if you remember, I'm only a 50% owner on all of these properties. Some of them are with my dad and my brother, some are just with my dad. That means my total profit is $1,239.99 a month. Now, if you were here last year, there's only a really slight increase. It's less than $100 more than what happened last year. Why is that? First, one of the houses that we had with cash, meaning we had more cash flow from that property, property number 2, we ended up refinancing, so we ended up taking on more debt this year. That takes a lot of our cash flow away. Not only that, but the cost of items have gone up dramatically. Property taxes have gone up, insurance has gone up, property management costs have gone up. All of these things have taken away from our bottom line. It might not seem like a lot of money to you, but I'm in this for the long haul. My goal first is to retire my dad, then my mom, then myself. I still have a long way to go. I naively thought I was going to be able to achieve that goal by the end of this year, but I overshot myself and the market really hurt me from being able to do that. But I'm not going to blame it on the market. That's just, I'm going to blame it on my inexperience for assuming that I'd be able to scale that quickly. Also, it's just been harder to buy properties with really high interest rates because they haven't dropped enough to really match everything yet. But we're starting to see that change, and hopefully by somewhere in 2023, we'll start to see a better buying scenario for buyers. I'm actually holding on to some cash right now because I'm planning on trying to buy a property in Italy as an Airbnb, but stay tuned for that. If you haven't checked them out yet, I highly recommend you check out Fundrise. If you like supporting the channel and all the work that I do to come on here and teach for free, then make sure to check them out because they supported me. If you want to learn how to buy your first rental property step by step, then click the video on screen right now to go check that out.